Hello, thank you for joining me, Fiona Cincotta, here at StoneX. And today I am joined by Kathryn Rooney Vera, who is the Managing Director and Chief Market Strategist at StoneX. Thank you for joining us, Kathryn.
Thanks, Fiona.
So, lots to look forward to this week. Central banks in focus. We've got the Bank of Canada, we've got the ECB, and also this all comes at a time when we will be listening to some comments from Federal Reserve Chair Jerome Powell as well. So what do you see going on with the Bank of Canada? Let's start chronologically with them.
Sounds good. Look, Canada is probably on the precipice of a cut or a dovish hold. That's what I think is going to happen here. They've already cut twice. They're at 275 at the moment. The markets are leaning towards a 25 basis point cut. I tend to lean more towards a dovish hold because they're still figuring themselves out and figuring out us, their southern neighbor, to see what transpires on the trade front. So yes, business sentiment has collapsed. It's dropped here in the United States. It's also dropped in Canada. You see labor market slack. All of those things lead to the potential, the high probability of a rate cut. I just think that the BOC wants to maintain some optionality, whether to cut now or cut later, and see how things develop between now, June or July, when they have the next meetings.
Yeah, completely. So that would actually give them time to pause and assess what the impact is before taking any decision. Yeah, I think I'm with you on that one. I'm in line of for a dovish hold. And I guess it's interesting as well, looking at the strength of the Canadian dollar against the weakness of the US dollar as we head into that meeting. Which draws me to the ECB, because the euro is obviously trading very high against the US dollar. What about the ECB? What do you see the policymakers there doing?
Well, there we have the ECB having already cut 6 times since June of last year. So now they're at 250. I think it's going to be similar. I think Lagarde is going to hold rates also in a dovish fashion. I think the growth picture is very different from the one that we have here in the United States. So I expect that going forward, there are going to see additional rate cuts, probably predating the next Fed cut. But I think it's a similar profile to Bank of Canada in a wait and see mode, and really allow things to develop before taking additional further action.
Yeah, because as you point out, I mean, the growth in the Eurozone region is really stagnant anyway, heading into these problems with tariffs and the impact that they could have. Yeah, exactly. And then we've also got Federal Reserve Chair Jerome Powell speaking this week. The Fed, I mean, they haven't showed any signs of stepping in as far as rate cuts are concerned. What do you see the Fed what's their position as far as you're concerned?
The Fed is right now engaging in clandestine liquidity measures. This is not something that's been a formal announcement. It's not rate cuts. We shouldn't expect rate cuts. This is a lot. There's a lot of discussion around whether or not the Fed is going to cut rates. In my view, what we're seeing now is this sort of stealth easing of financial conditions. Last week we saw $95 billion in additional in additions in terms of their balance sheets. So what we're seeing is a Fed trying to tackle the liquidity issue, which is a real issue here in the United States. We've seen treasuries sell off in an enormous way, and that's the last thing that this administration wants to see. And truly, it puts the Fed in a difficult position, Fiona. The Fed is in a very tricky position. Not that it didn't have some part to play in where we stand today, but we're in a situation of persistently above trend inflation, with growth that's markedly slowing. Hasn't started yet in the hard data. We've seen it in the soft data, consumer confidence, retail sales, all of these things. But I do expect that to come to fruition in hard data over the course of the next several weeks. And I think by the second half of this year, we will see the Fed engage in rate cuts.
That's interesting. So, I mean, yeah, as you said, we've got a lot to be looking out for as far as the Bank of Canada is concerned, the ECB, but also the Federal Reserve and how they will be looking to control measures in the US with those liquidity concerns, particularly as we saw those big moves in the bond market last week.
That's right. And this is what I published a note recently, and I mentioned that the core trigger of that was leverage basis trades. And just to make sure that we get this correct, they're hedge funds that are long cash treasuries short futures. And what happened last week, Fiona, when we saw the 10-year Treasury rise by 60 basis points in 1 week, that's unlike anything we've seen in the United States in the Treasury market since 2001. That's a very serious move in the Treasury market. And what that tells us is that people were liquidating. They were just to get liquidity, they were selling the most liquid assets. So it wasn't a macro issue per se. It was more a liquidity issue. We need the cash now. We're going to sell the most liquid instruments, and that happen to be treasuries.
Yeah, excellent. No, super interesting. Thank you so much for your insights, Kathryn. A pleasure speaking with you.
Thank you, Fiona. All the best.
For more videos like this, please do like and subscribe.